Meta is getting far too cheap to ignore, down 26% from its recent highs, and just losing a lawsuit that could completely redefine everything. But why is it actually too cheap? And so we're going to go through every single reason that you have to be aware of and things that you might want to consider if you want to get more of Meta or potentially sell your shares. So with that being said, let's jump into it. If you haven't already and you do enjoy these videos thus far, just real quick, I would really appreciate it if you can click the subscribe button and click the like button so it shows YouTube that you are enjoying the video. Well, with that being said, let's go ahead and jump into it. So as you can see here, Meta just lost a lawsuit here, one of thousands in the queue, but this was a very pivotal and key moment. So we're going to walk through the lawsuit here. So in March 2026, Meta platform, so Meta, was hit with a major legal bill totaling over $380 million in damages from two separate lawsuits concerning child safety and addiction. A New Mexico jury ordered $375 million for misleading users on safety, while an LA jury found it liable for $4 million in damages related to social media addiction in teens. Okay, so this is nothing new for lawsuits against bigger companies like Meta and YouTube. And for years, there's been an angle that the content on the platforms is harmful. It's harmful exposure to especially, people that are minors. Okay, so how is this lawsuit any different? The reason why this lawsuit was different is because they went after the actual fundamentals of the way that it was built. And the lawyers talked about how it was essentially like a casino, how you can just scroll forever. And it wasn't necessarily the content, but it was the addictive nature behind just being able to scroll forever, the doom scroll. And so that was a big piece about it. Let's keep reading though. Child safety liability is $375 million. So they did find them liable, and also a social media addiction trial. So this was a Los Angeles jury that found Meta and YouTube liable for causing a user mental health struggles and addiction. Meta was found to bear 70% of the responsibility, totaling $4.2 million. Ouch. Now, obviously, the money isn't the biggest thing for them because Meta is worth a ton of money, but it's the exposure to this that has caused a little bit of uneasiness with the stock, and we're going to get into that. The company's response: Meta disagrees with the verdict and intends to appeal, maintaining its commitment for teens. The stock impact, obviously, it went down, dropping 17% early in 2026 due to these legal issues and the skepticism regarding high cost of the market cap. There's also some layoffs and legal pressure, which we're going to discuss here in a second, but let's see what the analysts are thinking of the actual price target. So as you can see, Meta Platforms, Meta, stock named Morgan Stanley's top pick with a $775 billion, 775 price target. So what do I actually think of this Meta? Because I think this is a tremendous company to hold long term. Now, if we look at the year chart, you can see quite a bit of volatility and not too much movement. It's gone down to basically where it was last year at this time, crossing over the MACD a few times. Let's go to the 5-year chart. So you can see all-time highs almost hitting 800 and then coming back down to around 520. So in addition to this lawsuit, there is a big thing that happened within the head count. And so the actual payroll of the staff in Meta. There was over 30% headcount reduction with Meta. This is obviously due to AI, just thinning out, obviously, the growth, helping out the bottom line, but also really due because of the CapEx expanse. So they are spending a lot of money on CapEx, building out data centers, infrastructure to really stay ahead in this AI race. And if you don't know, Meta has a lot of revenue coming in from its actual ads. I think it's like 38 billion every quarter. It adds up to be like roughly 170 billion a year, which is pretty close behind Google, which Google's like 210 billion a year. So with that being said, Meta is investing heavily to help advertisers create their ads with AI, which is pretty cool. So think of, instead of you sitting down and creating an ad, making a video, editing it, and then Meta using that data to then figure out who to target, it's actually the backwards effect. So you can punch in all the info, exactly what you want your ad to be about, and then Meta can create the ad for them. And so I think this is going to have big ramifications in a good way on the actual company's direction, and good fundamentals companies do bounce back. So I'm buying very heavily with Meta. Now, they did miss last earnings, which was the first time they missed earnings in 2 years. Not a huge deal. We saw the stock slide a little bit, but it came back up quite a bit. If we look at their statements, as you can see, total assets here of Q4 2025 were $366 billion, and then liabilities were $148 billion. So around equity position of $217 billion. Meaning when stuff gets, when crap hits the fan, if there's a recession or if there's anything that dips with Meta in particular. Let's say the lawsuits get really bad, and there's just a whole fundamental shift in the way the ecosystem works with Meta, with Instagram, Facebook, all these different platforms. They have a lot of cash on hand to really go through the storm. So once the fear settles down with the lawsuits, which there's always lawsuits, this one just sounds and looks really bad. But if you didn't know, there's like hundreds and thousands of lawsuits on the exact same topic that are coming after this. So that's what the fears are based on, is because now the precedent has been set in court that, oh wow, you can win from this angle. And now there's just hundreds and thousands of people behind waiting for their turn to get awarded money and stuff, which I don't think all of them are going to be awarded money, but I think there's a strong chance that we're going to see some movement. So you can see the market cap of Meta, 1.45 trillion. Let's see here the actual EPS. So earnings per share, 23.96. So still pretty decent. And as you can see, obviously they hit earnings besides Q3 in 2025. So what do you actually do in this scenario? Because I think Meta is a fantastic position to really consider selling leaps very shortly, or just dollar cost averaging on the way down. So you can see here, we're on the way up. I personally believe that there's a strong percentage that it'll sit here at this support level. So you can obviously jump in, wait to the support level, or you can get some leaps down here. Now, the biggest things to really avoid is just jumping in based on just hearing one or two news articles. And so we're going to read this one here because we want to actually stay up to date on those. So is Meta Platform still a good stock to buy by Yahoo Finance? So Antaka's December 2025 investor letter explains that while global equity markets performed strongly in 2025, driven largely by artificial intelligence, a small number of high-performing technology stocks, the fund did not outperform during the year due to significant dispersion in stock returns across the portfolio. Some holdings generated strong gains while others declined due to short-term factors such as concerns about AI. Looking ahead, that fund mainly positive market outlook, believing that long-term opportunities remain strong as AI adoption accelerates. AI is not going anywhere. We just have to adopt to it, driving major investments in data centers, semiconductors, energy infrastructure, and critical commodities like lithium. The managers also note that rising geopolitical competition, resource scarcity, and technological disruption are reshaping the global economy, but believe their strategy investing to high-quality companies benefiting from long-term structure trends will continue to deliver strong returns over time. Consistently, the portfolio has been adjusted by adding to undervalued positions, trimming holdings, and rallied strong to initiating a new investment in lithium producers to benefit from expected future supply shortages. Now, remember, what they mean by lithium is a key component in technologies like batteries. It's needed a lot in data centers as well. So we're seeing a lot of growth in that sector. So stocks like Meta Platforms in the NASDAQ is a social media and technology company that operates platforms like Facebook and Instagram while investing heavily in virtual reality and digital advertising. The 1-month return of Meta Platform was negative 9%, while its shares traded between $4.79 and $7.96 in the last 52 weeks. On March 24th, 2026, Meta Platform stock closed at approximately $5.92 per share. Okay, so it goes on, and essentially what they're saying is we are approaching those 52-week lows. And it's not necessarily something that we need to be worried about because, as you can see, there's always volatility on this company anyways, but long term, they're investing in the future, in the AI technology to stay relevant in the market, which is super important. And really, one of the biggest pieces in these companies, they need to be adapting. If you're not using AI, the upside that you're missing out on is massive. Like, it's going to stay around. Let's not be a pessimist about it. And so with that being said, leaps and dollar cost averaging into Meta is what I am doing. You, of course, need to make your own decisions in the market. But if you like the content that I'm making, you like the videos, make sure to click the link down below. Apply to join my mentorship so you can see all the entries and all the exits on these positions and staying up to date on the leaps as well, the entries and exits on those. But with that being said, if you guys enjoyed this video and you haven't already, click the subscribe button. It means that you obviously want to join the channel and the family, and I'd really appreciate that. And we'll see you guys on the very next one. Take care. Peace.